Some of the top oil-producing countries agreeing to freeze production, news that is helping to boost the price of the closely watched commodity. Let's bring in Spencer Welch, an oil analyst with IHS in London. And so, Spencer, these countries include Saudi Arabia, Russia, Venezuela, and Qatar, all agreeing to maintain January's production levels. Now, we're seeing oil rally on the news, but is this really enough to boost prices?
Hi, thanks for having me on the show. The agreement itself is not going to do very much, certainly not in the long term. So, as you've said, all they are agreeing to do is to freeze at the January levels. The market is already oversupplied, so those countries just carrying on supplying at their current rate really isn't going to do anything to prices in the long term.
But do you think perhaps this is the start of more cooperation among producers to prevent the slide in prices? And if so, what does that mean for stocks?
Certainly, that is a potential. That, as you say, this could be the first stage, whereby the next stage is to agree a cut in production. But here at IHS, we still think that's very unlikely. For two reasons. One, they'd have to agree how much they were going to cut, as to who was going to cut what, and I think that would be very difficult for them to reach that agreement. And then the second thing, which is probably even harder, is then to stick with what they've agreed. So although this is a potential, it's the first stage, we still think an actual cut is very unlikely.
And you mentioned production cuts. We also have Iran trying to reestablish itself as a player in the global oil stage. How does their production affect prices?
Well, you're right. The nuclear sanctions have been removed, so Iran is trying to increase production and regain market share that it lost over the last couple of years. So it will have a bearish impact on prices, pushing price down because of additional oil. We expect about 400,000 barrels of additional oil on the market in the middle of this year, but a lot of that has already been priced into the market. The market expects that oil to come back.
So given all this, would you say that the $30 handle is a pretty realistic bottom for the commodity?
Yes, we would. Certainly for the first half of this year, we expect the market to remain oversupplied. But then in the second half of 2016, we expect supply and demand to come back into balance, partly as a result of some increased demand and partly as a result of some reduced production, particularly in the United States. Once the market is back into supply and demand balance, then we expect a slow but steady increase in price in the second half of 2016 and through 2017.
And do you expect the stock market to continue to be laser focused on the price of oil?
Absolutely. Oil has been critical to the global economy for the last 50 years and will remain so. As some people benefit from the low price and some people suffer, particularly the oil producers. So whichever side of the spectrum that you sit, everybody will be very, very interested and focused on exactly what is going to happen in the oil market.
All right, Spencer Welch, an oil analyst at IHS in London. Spencer, thanks very much for your time.
Thank you.
I'm Scott Gamm, and you're watching The Street.